They got it wrong. Their positions and stopped shorting regional banks. They're now favoring the upside. But listen, you got to be careful with that bad boy. Because when they start turning to regional banks or they start investing in the financial sector, when we've got high interest rates, we've got a stupid run-up in oil's price, given that the Saudi Arabians have put a cap on that bad boy, they are playing with fire. It's going to start making things a little bit difficult for the economy to literally thrive. How is money going to be moving about if oil is expensive, interest rates are high? The only people that are winning when interest rates are high are the banks. We're going to be diving into this article and we're going to have a look at what we need to be aware of if this situation actually does flourish. High interest rates, hedge fund managers going into banks, high oil prices, and we're going to look back at what happened in 2007, 2008, just so I can help you align yourselves with a perspective of why oil will always dictate where we are in the economy. Because you know what the flavor is. A machine needs oil. More importantly, ladies and gentlemen, we're going to be diving into Bitcoin's price action. We're going to be looking at Bitcoin, well, the stablecoin Bitcoin. Don't worry, I know if I take the piss out of a couple of Bitcoins, just look, I'm having a little bit of a joke with you, okay? Bitcoin is the future. Yes, it is the future, but right now, Bitcoin ain't giving me no flavor to be thinking upside movement. Some people are looking like, yeah, now's the time for Bitcoin to go up. But something that's going on with Coinbase has kind of got my attention. Coinbase is now looking at providing a lending platform to institutional investors only, keeping the retail trader locked out. So is cryptocurrency only going to be really working for the big players? Park the idea of retail trader to the side because they're not really bringing any flavor. It's one of those ones right there where you're thinking, hold on a second, surely you want to open it up to the masses. Well, we haven't exactly had the greatest reputation in cryptocurrency, given that Stake, the gambling platform, has been hacked. And don't worry, funds are okay. But come on, man. They're getting hacked now. It's like, what's going on in crypto? Can't you just leave crypto alone? So, let's get with the flavor, ladies and gentlemen. All right then, cool. What have we got? BTC right now. We got the markets opening in less than 25 minutes, so I'm going to be filling this live stream with lots and lots of information. Mad love to all of the chat. Yes, what color is my shirt, ladies and gentlemen? And I do need to tell you, my endorsement by Speedos has actually fallen through. I said to them I wanted to wear the trunks, you know, the briefs and what have you, get with that beach body look. And they were like, nah, man, we need you for the polo shirt division because, you know, you're wearing the Lacoste and all of that stuff. Can't you advertise this? And I was like, nah, that's for Lacoste, man. I want the Speedos. I want to be there. Open arms. We know when I come to the States, guys, I'm going to be hitting straight away Florida, Miami. And you're going to be seeing me walking up and down that beach in the Speedos. That is a promise. Wow, what did I just say? I'm going to start the live again. I just made a promise on practically YouTube. Moving on. Bitcoin right now is behaving like a stable coin. We ain't got no movement up. We got no movement down. Volume is terribly low. People are just waiting for a reason to step into cryptocurrency. The daily chart itself is presenting us a very interesting story because it just looks like it just wants to go down. Me personally, before they go down, they have to move up. We know that's the business model, okay? But Bitcoin doesn't look like it's showing any remorse and it just wants to eat the flavor to the downside. And my eyes are only geared towards this area in the chart, this nasty green vector candle around the 24,000 region. By the principle of the hybrid system, I'm expecting Bitcoin to come towards this zone. So yes, ladies and gentlemen, go short on Bitcoin because I just said I think it's going to go to that point. Listen, it's not financial advice. It's common motherfucking sense. Take what I say and build your story. Can you withstand a move back up to Bitcoin in this, back up to Bitcoin, but back up towards the vector candle region at 27,325? We know that they've got the flavor right here. They like to swipe to come down. We've got ourselves this violet vector candle right here, which is posing a bit of a problem for me on the daily chart. Lots of people are expecting Bitcoin to drop, but look at what they're doing at the lows. They're spiking, swipe up, and it's starting to slow down. We've got the liquidations all the way over here on the 7-day chart. That's going to put things into perspective for us. Now, look, this is how I see things, okay? Let Let me just change this bad boy up because it does need the max liquidity. Cool. Now, this is on the 7-day chart. We see liquidity at the 28,200 zone with $2.7 billion worth of short liquidations. All right. Even closer, we've got 26,750. We actually have ourselves roughly around, $2.2 billion worth of short liquidations. But the reason why I'm looking at the higher time frame is because I'm trying to factor in the idea of what could be happening in the marketplace that's going to affect cryptocurrency overall. Scams, hacks, institutional investors are only interested in doing business with Coinbase. Like I said to you guys yesterday, look at Coinbase, then look at Bitcoin, because usually if Coinbase is doing good, Bitcoin is likely to do good because Bitcoin has that stigma. It needs to be looking elsewhere. Gone are the days where we're like, yeah, Bitcoin by itself. We're not there yet, ladies and gentlemen. That's the hard truth. Because if NASDAQ goes down, Bitcoin goes down, we're still in the idea that Bitcoin is following the NASDAQ and the bigger narrative of the marketplace. You've got to focus on where money is going. In this chart right here, we're going to look at the 6-month chart just to put things into perspective. And we have got this rough yellow area, similar to the color of my polo. $181 billion worth of longs at 24,300. So yesterday's story was talking about market makers missing out on the opportunity of making more profit on the backs of retail traders. Derivatives volumes, spot market volumes are tanking. Do you think they're going to leave that liquidity there? I don't think they will. Who am I? I know nothing. But if there's $181 billion sat right there, and even if that figure doesn't exist, logic would say that the bigger imbalances in the chart are sat inside of these zones. Now, you might see this as, Tino, shut up, man, please. Stop being so bearish on Bitcoin. I'm sorry. It's not about me being bearish. It's about understanding when money has been put in, money needs to be taken out. Welcome to the world's ATM. You know? This is how the game works. To put things into perspective on where investors' heads are at, go to the USDT chart. Look at all our levels that they've come and cleared, taken every single one of them. Now, this is what we've got to be mindful of. I've got this problem all the way up here at 8%. There seems to be this understanding that people are loading up Bitcoin, selling it on the short term. Use this chart to effectively work out the psychology of people in crypto. How often are they exchanging USDT into crypto and back? Look at this. This is the daily. All we've seen it do is move up in impulses. Impulse 1, impulse 2, another impulse here, and then a nice strong impulsive move right there. Logic says that we are going to assume they're going to want to try and clear out this area right here. Or should I say, most investors would be geared to buy Bitcoin if USDT can clear up the 8.5 region. Why? Because that's the last time they started buying up cryptocurrency. So we think that if the market has a good memory, we're going to assume that people are going to do something if USDT gets towards that 850 zone, that 8.5% region. Okay? That's what we got to be thinking about. You can take your cycles and your rainbows and all of that stuff, but the fundamental fact is this. When money moves from one asset to another, it's going to have a ripple effect. Let me give you another principle. Some of you may or may not be aware of the carry trade. Now, the carry trade principle involves Aussie yen. Now, Aussie yen, usually by hedge fund managers, investors with the big caps and all that stuff, they like to take advantage of low-yielding assets like dollar or yen. They will take those and exchange them for high-yielding assets like Australian dollar, okay? They'll take that Aussie and then they will go and buy NASDAQ stocks, S&P, commodities, Bitcoin. When you see Aussie moving up or Aussie yen moving up, it means investors are effectively loading up on assets. To put that into perspective, all we need to do is go and add ourselves the NASDAQ. So if I add the NASDAQ right here, look at NASDAQ, we'll just add that there. And you can see Aussie's going up, NASDAQ is moving up. All right? Now, what we see in Aussie right now, Aussie yen, is it's consolidating sideways. Now, there's two ways we can translate this. We can assume that if investors are loading up, getting ready for another run to the upside, then we will principally be expecting Aussie to be moving up. That means NASDAQ is effectively getting ready to move up, okay? They were even talking about an all-time high on the S&P. So that could be a possibility. Aussie yen is going to give us the clue as to whether or not they're getting ready to bring that flavor, okay? If they're going to exchange dollars for yen or dollars and yen for Aussie, which means they're going to take that and go and buy stocks. S&P, NASDAQ, gold, oil, you name it. But if Aussie yen starts to drop down, then we're going to assume that they're actually loading up on assets or going into cash, because we know that the market makers work in this way. Smart money. They buy when it's dropping, they sell when it's rising. So have we just witnessed the sell-off to the upside? I may have caught you on the wrong side, ladies and gentlemen. You're thinking, what's this guy talking about? How can prices rise when there's a sell-off? That doesn't make sense. That's exactly what makes sense, ladies and gentlemen, because the business model is designed to make you do the opposite thing. That's why Bitcoin moves up before it goes down. That's why it moves down before it moves up. You guys should know this. Go back into Bitcoin. How many of you are like, when Bitcoin drops, you're like, yeah, baby, I'm getting Bitcoin on the cheap. You're buying it up. Principally, all the Bitcoin holders are like market makers. You guys behave that way. You buy when it drops. Cool. So don't be negative when it does drop. Now, before we get into the open of the market, I'm going to be looking into dollar. I'm going to be looking into euro. I'm going to dive into dollar yen. But we're also going to be diving into oil and why oil is very important for us. But this is what I wanted to talk to you about in regards to the hedge fund managers switching up the narrative and going long on regional banks. Check this out. This right here is the S&P Regional Banks Select Industry Index. Okay, so this is the index for regional banks. We look at the chart itself, and it doesn't look like very favorable at all. But it is actually doing relatively well, okay? We go into the table view, and we can see for the quarter, regional banks are up nearly 8.5%. And they are actually 20% off their lows back in July. You see, back in July, these hedge fund managers were very bearish on regional banks. Why? Silicon Valley, man. That bad boy got swapped. Swapped. I meant to say slapped, okay? It was all hell. But it was clear as day that liquidity wasn't an issue because JP Morgan, Bank of America, Fidelity, and all the top boys decided to roll in and say, we'll take that bank. What's the customer base like? Yeah, there's a few thousand people in there. That's fine. In the next run-up, we're going to be able to take advantage of this bank and sell our products to these customers. Nice. So, they're starting to load up. Now, here is a list of the banks that are actually doing well. And one in particular is a new bank, not so much new, but we're going to dive into its statistics in a minute. It's involved in digital payments. But you can see, look at this, Apptech Payments Corp, up 405% for the year. You got this bad boy, Grupo Financiero Galicia. I don't know if I'm saying that correctly, but it's up 106%. First Citizens, 68% for the year. Bancorp, 55%. Oak Valley, 45%. Cantaloupe, whatever it is, 36%. Like, look, are you getting the idea right now why hedge fund managers are feeling like, hold on a second, we're missing out on some bad boy right now? Okay? Check this out. Here's the list of these banks that I'm talking about. Well, the main bank that I'm talking about. Apptech Payments. This bad boy right here is currently putting in a patent for a payment as a service product. You know, software as a service, well, SaaS. Well, these guys are dealing with PaaS, all right? Now, these guys ain't young. These guys have been around since 2010, which was their initial IPO, which is initial public offering. Right now, this bad boy is priced at $3.12. So if the future is going to be digital payments, a company like this, which develops a cloud-based fintech platform for digital payments, processing, banking, and merchant services, no different to what Coinbase is all about, we're probably going to see some flavor in this stock very soon. That doesn't mean go and buy it. But what I'm trying to convey over to you is this is what hedge fund managers are effectively stepping into. Look at the weekly chart itself. You can see only 4% of funds hold this. and 15% is held by management. No banks hold it, and we're starting to see a little bit of an increase in the ownership of funds over each quarter. Not much happening on its earnings per share, but it is relatively getting a little bit of flavor and interest from investors across the board. This is what we've got to look for. Okay, the company itself is what we're talking about right here. Apptech, powerful patent library. These guys are running the show right now in their division as such. Luke D'Angelo is currently involved in the development of the product, and here's the patent itself. Okay, so you can dive into that. Subscription-based system for providing commerce information for one or more mobile devices for or more. You get the idea. Okay, these guys are trying to hit the Shopify extent, or the way to do business via transactions in the digital space, right? Look at who this guy is. This guy is a CEO of another company. If I bring that up for you right now, I think it is. No, it's not them. No, that's not the company. I've got the list right here. Here we go. There it is. So the guy behind the patent, which is Luke D'Angelo, is currently CEO of this company right here, all-in-one fintech platform, paytome.co. All right, so there's the payment platform, Pass. Why am I telling you this? It's to get you to go in the rabbit hole and understand what's going on. We don't know that these guys could be on track to becoming another PayPal. You don't know. Look at the market cap of what is going on in the sales software as a service. Now we're going into another market cap, which is payment platform, payment as a service. Okay, this is how you can prolong the idea of how likely an asset is going to survive. This company itself has been around since 2010. Okay, that's good news. They've got longevity, but they haven't really had that much interest with a market cap of 63 million. Bitcoin's better than that. But it does actually make sense. But listen, they're getting involved in Brazil and Mexico. In essence, Brazil is an emerging market. How big that bad boy is. Look at BRICS. They're already trying it. You know, emerging markets trying to join together to effectively capitalize on the dollar. That's what we got to be mindful of. So when you're doing your research, go check out these stocks. Okay, I've got everything in the description of the video anyway. All the sources regarding the stories are all in the description of the video. Okay, now just a little bit more of a pressing issue. Don't know if any of you are involved in stake, but they've got here that they've lost 41 million to hot wallet hackers. They said everything is okay. Don't worry, your money is safe. I ain't leaving my money in there. I don't know what stake. I didn't know what stake was until I heard about it, but it's just, this is the problem with cryptocurrency. You know, they obviously have a decent business model where they want to offer a service for people to be recreational with their cryptocurrency. That is perfectly fine. There's nothing wrong in that. But again, stigma, cryptocurrency, anywhere you put your money, it's prone to hacks, which is probably explaining why Coinbase right now is offering lending to institutional investors. That means it's going to be a cloak and dagger. They're going to do it behind doors. People are going to be able to see what's going on, but they may not have the involvement like the way I would personally go and try and borrow or lend cryptocurrency as such. This is how you get rid of the potential for hackers. That doesn't mean that hackers can't hack into anything. Damn, they can hack into the White House. We know that's the story. But am I allowed to say that? But anyway, this is what's going on in cryptocurrency. They're trying to push away the retail trader because the retail trader knows that cryptocurrency is a little bit of a scam. But the endorsement of institutional investors itself is probably going to set light for the ETF. Think about it. You know, if money's being exchanged over there, then there's governance, Coinbase on the stock market, regulations and what have you. That's going to be good news for cryptocurrency. Is it going to happen anytime soon? Well, that's another story, which leads me over to the next discussion. Oil. To help you understand what's going on with oil, guys, you've got this absolute phenomenal move to the upside with oil. It's breaking away from that $80 mark, given that it's been stalling inside of this zone. Okay? Now, just before the last bull run to the upside, oil traders were effectively in a bit of a concern with regards to the economy and what have you. And now we've had this drop to the downside. Of course, COVID and all that madness. Everything comes back down again. Now, let me draw your attention to something important. Then we're going to get into Bitcoin price action, look at some levels. I want to just deliver this idea over to you. 2007, 2008 subprime mortgage crisis, all right? The reason I make reference to it so much is because human nature doesn't change, bros. It doesn't. We do the same shit all the time. Interest rates get increased, cool. Businesses are costing more and more money to operate, okay? What's the impact of that? We come to a little bit of a bubble, everything's too expensive, then bang, crash. The Federal Reserve decides to switch it up and change their fiscal policy and start reducing interest rates. Investors or hedge fund managers, they can't wait for those events to happen. They have to put the money somewhere to work because quite frankly, they're not using their money as such. They're using people's money, investors' money, who are like, I want to see a return of 8% on my portfolio. What are you doing about that? Okay? So, subprime mortgage crisis, everything is starting to go up. Round about this time, this is when the Saudi Arabians decided to increase their stake in oil to 7%. That was round about the $95 mark. And then it shoots up to $150 a barrel on what was going on regarding the subprime mortgages in the United States, which ended up having a trickle effect over into the UK and into Europe. We had declared the financial collapse, $700 billion payout by the government. They had to save Lehman Brothers. No, they didn't. They chucked them into the street. That's the brutality of the financial markets. Are we going to get the same bailout if we do come into another financial situation? This is what hedge fund managers, in essence, have to prepare for. After all the hype on the subprime mortgage and it's been declared, the market's topped out, they started to pull back, and then that's when oil decided to drop, okay? They were squeezing the marketplace. Now we look at oil and we say to ourselves, okay, then what's the story right now? Well, Saudi Arabia have cut the export on oil, trying to squeeze the United States. If oil is going up and interest rates are high and inflation is sticky with the potential for it to go even higher, Saudi Arabians are playing a little bit of a very interesting game here. They can't force oil to go up too much because then no one's going to be consuming it and they're not going to get the prices that they want. Supply is going to fly and then they're going to have to drop down the prices. China is even in worse a situation because their economy isn't seeking the demand. This move up in oil is not because China's consuming the oil. It's because there is a cap on the amount of oil that the United States is going to get access to, or even the world itself. But they're playing with fire. They've got to be very careful at oil because investors will turn to oil regardless of what is going on. Okay? If we are invaded by aliens and they're all going to come and just take us over, oil will still need to be used. Why? Because we're going to need to find a way to get away from this alien invasion. I'm going to put it in my car and get out and go. Yeah? Medical companies. People are still going to be ill. That's the sad truth. People are still going to break their legs. They're going to cut themselves. They're going to need the diabetic treatment, dialysis, and all the madness. That's why medical stocks always do well, whatever happens in the world. They would have to shut the hospitals. They would have to cut oil and say, we are not using it anymore. We're going to use electricity. But that's what's going on. Now, if oil keeps on going up, that's going to squeeze the consumer. We're already at $1 trillion for credit card debt. That's messed up. People are running on credit right now. And with oil prices going up, that only means for businesses that transportation companies are also going to feel the impact. So we're now going to start seeing companies charging more for their services. That's going to hit the manufacturing sector. We could actually get that right now. The ISM Manufacturing Services PMI is coming out at 3 o'clock today. Now, if that shows a contraction and it's reading below 50, then it means that the manufacturing sector ain't doing too well. Purchasing managers ain't really favoring the longer term, given that it only asks 3,000, or is it 2,000? No, it's 200 purchasing managers. Where is it? 300 purchasing managers. That's it. 300 purchasing managers are us. Yo, man, where we at with the economy? Nah, we didn't really get that many contracts this time round, and we're not really favoring spending that much money. We actually need to get rid of a few people in this company because we're actually getting squeezed. We ain't going to be hitting the revenues that we're expecting. So it's kind of a bit of a problem. Now oil is going up, so that's going to be hitting our trucker division. That means even worse for us. So we really need to think that it might be a problem for us. But according to Bidenomics, everything is doing well. So a reading still in the 50 range. So if it comes out and says 51.2, it means that everything is okay, but it is actually dropping. And they're already expecting it to coming at a lower reading, which will naturally have an impact on Oil, investors will be like, you know what? Shit's going to the pan. I need to start going up into oil. That doesn't mean you just simply buy oil and just hope that it's going to keep on moving higher non-stop because of the logic of investors feeling a little bit fearful. There will be profit taking like what you're seeing here, rise, retrace, continuation. But what I'm trying to convey over to you is understanding how economically oil is going to impact everything across the board. The longer it keeps going up, the more investors are going to come into oil because they know that it's going to affect other industries where people are going to have to diversify their exposure. You might have a portfolio of stocks in transportation. You know those companies are going to have a problem if oil is going to go up. Now, what if these transportation companies are the only companies that have to make sure that business still operates? Ultimately, oil makes sure money moves around, the machine money. That's what's going on. And if it keeps on going up in price, people are going to get squeezed. That is why they are hitting regional banks and investing in regional banks. Why? Because every single one of these regional banks is offering a loan, a service, a mortgage, credit card debt. You don't think any of these guys are offering credit cards? These are their lifeline. $1 trillion market. What's going on? That's why hedge fund managers are going into this, because they think that these guys are going to see the benefit of high interest rates with the potential for more interest rate increases. That means what? That means dollar dominance is going to keep on moving up, ladies and gentlemen. That means it's more lucrative to invest in the United States. Pick up US bonds. Why? Because you're getting a bad boy return. Look at this. The yields are up towards 5% yet again. Are we getting the picture, ladies and gentlemen? Now, I'm not saying to you that the markets are going to crash or markets are going to shoot up to the upside. What we're trying to understand here is we're trying to get the idea in our minds about the flow of money. There ain't no indicator out there that's going to tell you about the flow of money unless you see the behavior. Remember, the charts are always going to be the aftermath of that impact of the flow of money. Yields at nearly 5%. That means you're going to earn more money on a shorter period of time. Government has to advertise that. And look, it looks like it wants to go. They clear this zone at 5.1%. We got a big, big problem because that means that they're not interested in the bonds and looking like they've gapped down as well. So that's a little bit of a problem for us. They ain't picking up US debt. And oil is going to be, I think, the only thing that's going to save the United States is if oil keeps on moving up. Oil in dollars, done. That's the only thing that's going to work. All right? So now that we're done with the school and the lessons behind it all, let's get into the charts, ladies and gentlemen. So, Bitcoin. Now, what do we have? This is the hybrid system. Any of you that are new to it, go and check out the Traders Reality website. It's looking beautiful. I got a free course right there, and that breaks everything down about the hybrid system, okay? Gives you a snapshot of what you need to be aware of in relation to the moving averages and all the fun and jazz that we talk about, or which will I be talking about in the next couple of seconds. And then, of course, you want to learn more and dive into a little bit more of an understanding about how to scalp any asset out there. Go check out the Traders Reality scalping course. That is a paid course, but you're getting everything you need to know about how to scalp the hybrid system. Look at this guy. Anyways, tradersreality.com. That's where the flavor is. Now, let's get with some price action. Bitcoin, 25,700. Now we know the story. There's a few liquidations down below. But what will Bitcoin do first? Now, Bitcoin hasn't done anything. And I'm guessing there's a lot of people frustrated because there's only so much content that you can upload onto YouTube talking about Bitcoin. It's going to go up. It doesn't go up. Bitcoin's going to go down. It's not going to go down. Bitcoin's trending sideways. Congratulations. Welcome to the new addition to the stablecoin market. Bitcoin doing nothing. People are on edge right now. They want to know what the story is. Apparently, there's only 6 billionaires that hold crypto, or should I say 6 Bitcoin billionaires, and everyone's watching what they're going to be doing next. Now, let's pull up for my short-term day traders and for my long-term holders if you decide today's a day you want to pick up Bitcoin because it's cheap. Check this out. We got the book map right now showing an imbalance of 21% limit buys. That says up there, the top right, that people are buying Bitcoin on limit. Okay, so that prices are going down. Now we've got this one zone down here at 25,000. And if you remember, we saw nearly 1,000 contracts, 1,000 Bitcoin orders at 25,000. That has now been reduced down to nearly 553. So everyone's like, what's going on? Are they trying to get their orders filled sooner and moving it up towards here? Because now I've got collectively around 900 Bitcoin orders between 25,600 and 25,500. What am I looking for? I'll show you. Check this bad boy out. EXO. We're going to dive into Tesla as well. I'm going to do something very shortly for my guys who trade Tesla. But I just want to bring this to your attention on Bitcoin. Now, look. This is Bitcoin's order flow on the left of the chart here. Okay, so I'm going to move this here. Happy days. This is the order flow of orders coming in on Bitcoin. Right now, it says here on the 25-day chart. This is Bitcoin's order flow over 25 days. Okay? Now, you can see we are sat right now at this 25,697 region. We have got a little bit of interest down below in the value area low. So that means there are people down here willing to buy and willing to sell. Now, if Bitcoin does break below the 25,659 region, then they're going to start attacking the liquidity down below to find the interest of the guys who think this is cheap enough. I'm happy to buy it. Because inside this area here at 25,800, you've got 4.5 thousand contracts at the point of control. Below the point of control sits the VWAP at 25,796. So over a 25-day period, Bitcoin has been trading below the VWAP. And that's consistent with institutional investors buying below the VWAP to effectively sell back up into it to repeat the same process. But we are right now stuck in this value area, high bit here, and then value area low. This is value, the gray area. This is the value area low, which is consistent with reversal points. How far does Bitcoin need to go? In other words, where in the chart will it spark interest to get people to start buying, right? So we go into the chart on the smaller time frames and put things into perspective. 1 hour time frame, what do we have? There's only 2 points in the chart visible to me right now that say to me there's going to be a reaction. So if market maker is building his shorts above key notable areas, that means he's trying to go short from the highest point in the chart, in the visible range. He's going to want to try and get a reaction at this point right here, which is 25,316, okay? Here's another reaction, the stopping volume candle. That's where traders are trapped. It's not rejections. It's where traders are trapped with orders. It only reverses from that point because market maker has already done his business to load up the longs at the lowest possible point and the highest range, drop it down to shift it back up again because he has to make his money. If he continues to bring price down even lower, the retail trader that went short in this area is now making a profit. And market makers already got a problem trying to make a profit in this game, and they're missing out on 30% profit margins. They're going to be quick with the game and get their money out. So we then look at the chart and say, okay, so what's Bitcoin been up to then? Well, Bitcoin has been doing something interesting around the daily open. Let's go and have a look at what Ethereum's doing, see what that story is. Well, Ethereum looks like it's coming away from that zone. The market is open right now. We're seeing some flavor. Tesla's coming down, okay? Is the market going to get ready to make a big move to the downside? And what my concern is this. We don't really have any news to be worried about. And the one time that the market can really move is today, tomorrow, and of course, that's it. Friday, nothing much but for the Canadian dollar. There's no US news other than, of course, the unemployment claims. But there's nothing that's going to impact the marketplace to really scare everyone. Look what happened with stake. That hasn't affected Bitcoin. That hasn't affected nothing. Because it's just standard routine. It's business as usual in cryptocurrency. What we've got to be mindful of, guys, is this. When you're considering taking trades, even though it's coming down now, you've got to think about it and say, everyone's going short right now, okay? Now, if you want to ride momentum trades, go to the 5-minute time frame and look at where you are. It doesn't matter what you're trading, whether it's Ethereum, whether it's Bitcoin, it doesn't matter. Ethereum, you can see is compressed. Moving averages are tight. Nothing much is happening there, okay? I need to see some movement. I need to see Ethereum effectively clear away, come back into it to make me believe it wants to go lower. Because if they've just dropped it to only come back up into the range and consolidate sideways, well, I ain't going to be taking that with Ethereum. I'm going to be looking at other assets. For example, Euro. Euro's been bringing some flavor today, members of the channel. We saw that flavor to the upside. They've cleared that range. Happy days. Trying it with the daily open. Not yet succeeding it, but it could be a point of interest in this zone. Why? Because then it means that there could be some profit taking on dollar. Dollar right now is consolidating sideways. Now, Bitcoin will not go up if dollar dominance comes into play. All right? We've been watching this 104 region quite well. And if they do clear the 104 zone, dollar is going to keep on moving higher. And if they keep on maintaining the idea that cash is a better alternative and the yields keep on moving up, dollar's going to keep on going higher. Oil's going to see the benefit from that. That's going to be good news. And then, of course, assets like USD CAD, they're just going to keep on moving up as well. All right? Because oil goes up, technically, it hurts the Canadian dollar. Okay? It should actually bring value, but the USD chart should be going down. But if everyone is running to oil because they're concerned, people are going to be saving their positions. They're not going to be exposing themselves to stock. They're going to be going into the safe havens, per se, which means gold should be another one of those safe havens. But gold right now is starting to stick to a story and working its way down lower, clearing so close towards our 119 zone. So it's going to be very careful with gold, man. It does surprise people at times. Okay. Now, finally, Bitcoin, here we go. See, we're seeing a little bit of movement up. Again, it's horrible when you see this flavor. We haven't seen the test of the daily open. That's going to be important for Bitcoin. They've traded away from it aggressively, but they're still holding out. Now, guys, if you are going to start trading Bitcoin, just be very cautious because, look, they're showing you up and down, up and down. That means take profit where you can, all right? But the bigger picture is saying that Bitcoin has got a lot of liquidity down below, man. And we aren't too far away from that 24,300 region. Ladies and gentlemen, I hope you've enjoyed today's live stream. Lots of information. Everything is in the description down below with the sources regarding the story of the S&P and regional banks. Check out tradersreality.com, and I'll see you tomorrow. Peace.